Hi there, David here once again, coming to you on behalf of BeInCrypto. There's a pretty significant event coming up quite soon in the world of cryptocurrency, one that stands to shake up the very bedrock of DeFi. It's been a long time coming, but in September, Ethereum will finally be making that switch from a proof-of-work consensus mechanism to a proof-of-stake one. This event is known as the merge, and this video is here to explain what the merge is, as well as why it matters, where we are in the process, and what may come as a result. This video is obviously just meant to be educational, not financial advice. As we always say to our viewers, do your own research and make your own decisions. That all being said, what do you say we dive right into Ethereum's upcoming merge and what it'll mean for the crypto future? Let's begin by defining just what the merge actually is. The merge is the fusion of both the current existing execution layer of Ethereum, basically the network as we know it today, with the beacon chain, which is the new proof-of-stake consensus layer. The beacon chain has been running since December 1st, 2020, allowing developers time to observe and test it, and this merge will literally combine the beacon chain with the traditional Ethereum proof-of-work chain and all of its history. The result is that Ethereum will continue on as normal, only now it will be verified using proof-of-stake instead of proof-of-work. This completely eliminates the need for the existing act of mining, often criticized for being overly energy-intensive. Users will instead stake their ether in order to become validators, create new blocks, and earn a passive income, as this is the way that proof-of-stake networks operate. So, why is this important? Well, this update has been a part of Ethereum's roadmap for some time, and the benefits of making this change are many. For one, it's going to help Ethereum to scale. To be clear, it isn't the only development that's helping the network increase its throughput and lower its transaction fees, as sharding will have to be implemented first, but it's still an important one and it sets the stage for all future scaling. In fact, many are claiming it to be one of the most significant events in the history of cryptocurrency. The merge will also have a significant impact on the issuance and hence overall supply of Ethereum. Currently, the mining reward for Ethereum is around 13,000 ETH per day. The network also has a burning mechanism which destroys around 1,600 ETH every day. This means Ethereum is currently inflationary, as there's no cap on supply, meaning the total amount of ETH in circulation will only grow and grow. The merge will eliminate mining, and the staking reward will now be about 1,600 ETH, designed to roughly balance the burn rate. This should either severely limit inflation or even may make ETH slightly deflationary, depending on exactly how these numbers balance out in practice. While this doesn't guarantee any specific future valuation, the basic rules of supply and demand point to the idea that this should cause the price per unit to rise on average and over time. What's also incredibly important is the fact that the merge will mean a massive reduction in the energy usage of the network to the tune of 99.5%. This will then be true for every project built on top of Ethereum, meaning the entire ecosystem will be far more environmentally friendly. While this doesn't affect the carbon footprint of other cryptocurrencies like Bitcoin, it does help to address the concerns that many have expressed around the environmental impact of the DeFi space. So, do you need to do anything to prepare? Well, if you're simply an Ethereum holder or trader, which we imagine covers most of our viewers, then no. As stated, the entire history and state of the Ethereum network will be combined with the beacon chain, so the balances in all wallets will remain completely unchanged. For the most part, any services you use should continue to function exactly as normal, and if you weren't paying attention, you could probably miss that anything had happened at all. That being said, node operators, infrastructure providers such as exchanges and other services, as well as smart contract developers, will need to update their software and potentially take some additional steps to ensure a smooth transition for themselves and their clients. So, are there any risks? Of course, as this is an unprecedented move for the network. However, part of the reason this upgrade has taken so long is that developers have been meticulously testing and retesting the code to ensure that everything goes off smoothly. We can't tell you that there will be literally no issues with this merge, but the community seems confident that things will generally go okay. It's highly unlikely that any problems would bring down the main network, but it is possible there could be temporary issues surrounding specific platforms or smart contracts. Okay, so we've covered what the merge is, why it matters, and the inherent risk involved, but just what are the latest developments within this overall process? Well, at the time this video was written, the development team had just recently pulled off a successful test run of the merge on the Goerli testnet. The process works just like what will soon happen with the mainnet, only by using a testnet, the actual ecosystem is protected should something go wrong, giving developers a chance to catch and fix problems before the stakes are high. There were some hiccups due to the sheer amount of different client software being used in the field, but nothing major, and developers considered the whole test to be strong evidence that things will go smoothly with the actual merge. That being said, there is one important and interesting development to discuss. A certain subset of miners has indicated that they want to fork the network and continue mining Ethereum as a proof of work coin. At first, this would seem like an obvious development. It isn't the first time Ethereum is forked, and frankly, a community forking a protocol when they want to go in a different direction is pretty much the philosophy cryptocurrency was built on. That being said, in order to encourage a shift to the new protocol, developers have implemented what is known as a difficulty bomb into the existing Ethereum protocol post-merge. What this means is that the difficulty for mining new blocks, based around how complex the cryptographic hash that must be solved is, will ramp up to such a degree that it'll become unviable to continue to mine. However, a team of developers is working hard to keep what they're calling ETH proof of work alive and claim they have found a way around the difficulty bomb. They say they fully plan to continue mining proof of work Ethereum, with multiple exchanges, including Poloniex, stating or implying that if this fork happens, they will support both chains. Again, this is hardly unprecedented, as Ethereum Classic and Bitcoin Cash are a testament too. It is, in fact, pretty likely that this fork will occur, and the proof of work chain will continue to exist and see support. Just how much support, or the long-term prospects of yet another form of Ethereum, are somewhat harder to discern at this point. We aren't here to choose sides, just report the facts. We just want our viewers to be aware that this is likely, and just like with previous cryptocurrency forks, current Ethereum holders will have assets on both chains in the wake of this event. What those assets will be worth and who will honor them is less obvious, so it should prove to be quite interesting. So, when does this merge actually happen? Well, explicitly, it's currently slated to occur when the total terminal difficulty, or TTD, of the network hits this very large number. For us humans, this roughly amounts to September 15th, but even the developers have admitted it could be shifted a little due to last-minute circumstances. In any event, by late September, it definitely should have occurred, barring any currently unforeseen problems. After the merge will likely come that fork, but as mentioned, it shouldn't negatively affect any current holders. However, exactly how things will play out still remains to be seen. There's a good chance that there will be some form of hiccups or disruption, but nothing absolutely devastating to the larger ecosystem. And there you have it. That covers the main points you need to know about the upcoming merge and what it'll mean for cryptocurrency. Of course, there's plenty more to know, and nobody's absolutely sure what will go down. But most average users should now be informed, and like we said, unless you're providing some form of infrastructure, you should be just fine without taking any actions. Of course, as we all know, there's changes happening all the time in the world of cryptocurrency, and you're going to want to keep up. So why not check us out at BeInCrypto.com, where you'll find daily updates, analysis, and more. Also, don't forget about our other content right here on YouTube, such as interviews, educational videos, and our bi-weekly news show. Oh, and if trading is your thing, then join our free premium channel on Telegram to receive free trading signals from our expert traders. Lastly, we have some exciting news. Our partner, eToro, the world's largest social investing platform, is giving an exclusive benefit to the BeInCrypto community. All you have to do is make an initial deposit to eToro using our links below. Don't have the time to watch and follow all of the markets? You can also enjoy eToro's famous copy trader experience that allows you to automatically copy top performing traders, instantly replicating their trades in your own crypto portfolio without you having to do any research or work. Or try their demo account to learn how to trade in a safe environment. Okay, that's it for me. Thanks to everybody out there who's watching, and we'll see you all right here again real soon.